Hello and welcome. You're watching Market Meter on Money9, and this is a show where we discuss about market fundamentals and understand from experts as to which way are the markets really headed and where is the money going to be made. But before I introduce the guest of the day, all of your other viewers who are watching us on YouTube, you must like and subscribe to our channel and also hit that bell icon to get notified whenever we put our new videos. Also, stay connected with us on all our social media platforms. We'll be happy to have you on Twitter, LinkedIn, Facebook, and also Instagram. And you can get updated with all the latest information on markets and on personal finance as we put up them all through the day as well. Also on our website, money9.com, you'll get to know the latest articles and news articles about personal finance and markets as well. So stay logged on to the website as well. It's now time to introduce our guest of the day. Mr. Gaurav Garg from CapitalVia Global Research joins in to share insights on the markets. Good afternoon, and thank you very much, Mr. Garg, for joining in. It's a pleasure to have you with us. Let me just first begin by understanding from you. How are you looking at the markets right now? Of course, after 3-4 trading sessions of continuous record run, we're slightly seeing some breather coming in as far as the benchmark indices are concerned. Is this going to be a longer breather? What should be investor strategy right now?
Yeah, hi Sakshi, good afternoon. So yes, I think market has seen spectacular rally over past few weeks, and today we are seeing some kind of pressure in the markets, especially in Bank Nifty, wherein it is down by around 1.5%. Nifty is also trading at around 15,700 levels, which is probably a key support for this week expiry. The data suggests that downside is still very limited in the current market. And we might see some profit booking at higher levels because people who are holding positions for long would definitely try and book some profit before making any new position. So there could be some correction in the market from that perspective, and we can see some profit booking happening. However, overall, the trend of the market seems to be still, sideways to bullish. Although all the factors which were positive for the markets have now been factored in. So there is no major event or major positive which is lined up, which can give a further rally to the market. So markets are now going to kind of consolidate a bit and probably move up slowly and probably not at the pace which it has risen in the past few weeks. But still, I think it is a sideways kind of market, and not to become a kind of bear in the market as of now.
Okay, it won't turn bearish, but there could be some bit of consolidation that we could see in the markets for some time after the sharp run up that we have already seen. Let's now talk about some of the segments in the markets. Now, today we are seeing some pressure building up from the banking and the financial side as well. I know that all of us have been talking about how the next leg of rally could be done by the economic recovery that is poised to come, and banks could play a big part. But what would you say here, banks and financials? What should be the strategy?
Yeah, so I think this is one sector which is definitely expected to do well as the economy opens up. The rates are low. Demand is expected to come up in sectors like automobile and real estate. Banking is going to be at the forefront of funding all the requirements of people in procuring these items. So banking, I think there is a lot to happen. In fact, Bank Nifty for long now is underperforming. In fact, 37,500 was the highest level which Bank Nifty touched. So Nifty has already crossed it all-time high 2-3 times, but Bank Nifty is still struggling at around 35,000 levels. So I think the major reason being that two of the biggies, HDFC Bank and Kotak Bank, which are the major constituents in Bank Nifty, they are not able to cross that psychological level of 1,500 and 1,800 respectively. I think once that happens, we can see some major rally happening in Bank Nifty as well.
Okay, and I also wanted to take your view on the IT index. Now, this has been an index which has been in favor from at least last couple of days. And especially, we are now seeing this index move up to its record level as well. Are you bullish on this space? And if at all, yes, then which are the segments that you're bullish on? Is it the large caps? Would you look at now mid caps to catch up with the rally right now? And what should be investor strategy here?
Yeah, so I think one of the sector that is in our radar is definitely IT. Overall, the way of working has changed significantly. People are now very comfortable in working from home. It is going to be a great enabler, and not just now. I think for future 3-4 years as well, demand is going to be robust.
Sure.
On the currency side as well, I mean, the currency is going to be in favor of IT companies. So, putting it all together, I think IT is a sector which definitely should be in one's radar. And investors can definitely look at quality large cap stocks like TCS, HCL Technology, Infosys. And from mid cap, I think Techem and Emphasis are a few of the stocks which can be looked at. But yes, I mean, IT is a sector which is expected to do well in coming 2 3 years.
Okay, let's now move on to understanding your picks of the day. What are you recommending investors to do? Which sectors have you picked out and the particular stocks that you'd like to talk about?
Yeah, so for today's, recommendations, we have picked all three large cap stocks, blue chip stocks.
Okay.
So the first pick of the day is Reliance Industries. Reliance Industries has been underperformer for past few months before showing a very good run of around 15-20% in last couple of weeks. In fact, Reliance has been a major contributor towards Nifty touching all-time high levels. I think results have been really good from Reliance. The Q4 results were really good, and Reliance is rightly placed now with the economy opening up through its retail and geo franchise to actually kind of gain further momentum. We feel that at current levels, Reliance can be accumulated with a target of 2420 in next 12 months, which is around a 10% upside from the current level. So I think this is one stock which can be looked at now. Momentum is also in favor, so technically also this stock looks good, and fundamentally the stock is also really good.
Okay, Reliance Industries, the large cap stock that has performed in the last few sessions, that is poised to move up even higher, and there are higher targets for you to also see in case you're looking to bet on this large cap stock. Other than this, any particular stocks from the banking space that you'd like to recommend?
Yeah, so as we talked about, I think HDFC Bank is one of the largest private sector bank in India. Fundamentally, the bank is very strong. The bank is currently under some kind of pressure. There has been some goof ups on the technology front, wherein RBI has imposed some penalty. On the credit card side as well, the company is not allowed to issue new credit cards. However,
Yes.
through its very large branch presence as well as opportunity to cross sell and upgrade services, I think this bank has really done well in the past, and there should be no reason why it should not do well in future as well. Fundamentally, very strong company. One should definitely look at buying this particular stock with a target price of 1750 in coming 12 months. So this should definitely be in radar of investors.
Okay, HDFC Bank, there could be a target of about 1750 that would be seen in the long run. So that's something that if you can keep in your mind in case you're looking for private banks in your portfolio as well. Talking about the banking space, what about the PSU banking space? Is that a space that you're looking at? We did see in the last few sessions of run up in the Nifty bank, the PSU banks were also riding up higher and in fact much better than the private banks as well. Is that a space that you're looking at?
Yeah, I think PSU, I think overall space has done really well. I think one reason could be that aggressive divestment target which was set by the government of India. And once things get better, I think government is going to definitely work on that particular aspect, because that is one key lever through which the government will look at bridging the fiscal deficit. So PSU has done very well. In fact, the one of the largest banks of India, State Bank of India, is our pick as of now. Results have been really good. Both Q3 results as well as Q4 results are very nice. Company has seen stable, robust growth in loan advances. Net interest margin is also very healthy. The presence of the bank is also, I mean, as we all know, it's very good pan India. So I think this stock looks good, and one can actually look at buying this particular stock for a target price of around 520 in coming few months. I mean, 8 to 12 months.
Okay, so the record run for State Bank of India can also continue, and you could actually see targets of over 500 in the long run as well. So that's a stock that you should definitely keep on your radar. Thank you very much, Mr. Garg, for sharing these stock recommendations and your market view as well for all our viewers to understand which way are the markets really headed. Thank you. It's been a pleasure speaking with you.
Thank you.
Okay, and then let's move on to understanding how the markets are really, poised to move from here on. Let's see the current momentum as far as the benchmarks and the broader markets are concerned. For the benchmarks, it's still down about 0.2% for the Sensex and the Nifty. Although the Nifty is still managing to hold on above that 15,700 mark today, 52,225, the current level for the Sensex as well. The Nifty Bank is down now over 1%, so that's where the drag factor is really coming in for the markets. It's lost almost 380 odd points. It's now inching closer down below to that 35,000 levels. We'll just have to see whether the Nifty Bank manages to close the day above that mark or not. That's something that you should watch out for. But what's holding up onto the gains is definitely the mid caps on the small caps, although the gains have also stemmed a little from the early gains that we had seen in the morning trade. Now 0.7% gains for the small cap here, and when you talk about the mid cap, also up about 0.3% in trade, added about 75 order points at this point in time. Moving on to the sectoral picture, let's see that how that is really emerging. Still a half and half, if you would like to see for the markets. The advances and declines are just poised sideways. A 0.5% gains for the realty index, and so for the auto index as well. What's really pulling up the indices today is the IT space over 1% higher, and also FMCG index is closing up on a 0.5% uptick right now being seen there, and media stocks also inching up with 0.6% gains. Where is the pressure coming in? Clearly, it's the metal space that's not performing. It's losing some bit of sheen that it had gathered in the last few trading session. Over 1% of losses for the PSU banks and the private banks as well. What's also not really contributing to the markets right now is the pharma space. That's losing a bit of health in today's trading session. But other than that, there is still going to be some bit of consolidation, just like how Mr. Garg also pointed out. After that sharp run up, you may see some kind of consolidation really coming in, and people may be booking out profits which they have made in the last few trading sessions. Now let's look at the gainers and the losers picture as well to see how the Nifty pack looks like. So it's the FMCG major, Britannia, that's topping the charts right now, over 2% of gains. Other than that, it's majorly the IT counters like HCL Technologies, Infosys from the large caps, Tech Mahindra from the mid cap space, up almost 2%, and Tata Consumer Products again from the consumption space. That's taking all the limelight, about 2% uptick right now for this counter. When we talk about the laggards, you'll be able to see some kind of counters coming in from the metal space. Again, those three counters which have performed whenever the metal space really performs and are the dragging factors for the index too. Hindalco, Tata Steel, JSW Steel, all down about 2.5% in trade. SBI and also ICICI Bank, those are the two, banking counters that are down in trade by about 1.5%. So about 2 more hours to go for the markets. We'll just have to see whether there comes some bit of recovery in the last hour, or the markets shut shop today after consecutive 3-4 sessions of record run, record closing highs. Today would be a day perhaps when the markets could go home with the red. We'll just have to keep an eye out on that, and we'll keep you posted on money9.com for all of that. So to get all the updates on markets, you have to like and subscribe to our channel on YouTube, and also hit that bell icon to get notified whenever there is a new content up for you to see. Also, you could stay connected with us on all our social media platforms: Twitter, Instagram, Facebook, and also LinkedIn, where we continuously keep updating any kind of news updates and personal finance news as well for you to see. And also money9.com, the website that you'll get all the amalgamation of articles and videos, and all the interesting videos that you'd like to see from the personal finance and market space as well. Stay logged on.